very clear that God is the one that raises up those in authority. He raised up each of you, all of us. And I believe that God has ordained and allowed each one of us to be brought here for this specific moment in this time. This is my belief. I believe that each one of us has a huge responsibility today to use the gifts that God has given us to serve the extraordinary people of this great country, and they deserve it. And to ensure that our republic remains standing as the great beacon of light and hope and freedom in a world that desperately needs it. It was in 1962 that our national motto, "In God We Trust," was adorned above this rostrum. And if you look at the little guide that they give tourists and constituents who come and visit the house, if you turn in there to about page 14 in the middle of that guide, it tells you the history of this. And it says very simply, these words were placed here above us. This motto was placed here as a rebuke of the Cold War era philosophy of the Soviet Union. That philosophy was Marxism and communism, which begins with the premise that there is no God. This is a critical distinction that is also articulated in our nation's birth certificate. We know the language well. The famous second paragraph that we used to have children memorize.
Live sound from the House of Representatives. That's your new speaker, Mike Johnson, who actually became speaker a short time ago in a vote that included support from every member of the Republican conference. Thanks to Wendy Benjaminson for joining here as we wind things up. We'll be back with more from the other end of Pennsylvania Avenue, a conversation with Jenny Welch as President Biden meets with his counterpart from Australia. I'm Joe Matthew. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all lower. The Dow now negative on the year. Republicans today installed little-known Trump ally Mike Johnson as U.S. House Speaker, cementing the party's rightward shift and ending a messy three-week succession fight that paralyzed legislative work. So what about that market reaction? Libby Cantrell is Managing Director of Public Policy at PIMCO, and she was a guest right here on Sound On.
The markets haven't really been so focused on this. Obviously, this sort of collided with lots of other geopolitical and other issues happening, particularly in the U.S. Treasuries market. So I don't think the markets have really been paying all that much attention to it.
And indeed, you can hear more of the conversation on the Sound On podcast. You can download it wherever you get your podcast. Wall Street, though, is grappling with a batch of corporate earnings. That sent stocks lower amid heightened Treasury volatility, with traders also keeping an eye on the latest geopolitical developments. In terms of earnings, we've got Google shares now down 9.8%. It reported last night. Microsoft also reported after the bell yesterday, up now by 2.8%. So here is where we stand, with the S&P now lower by 61 points, down 1.4%. The Dow now at 33,031, down 109, down by about 0.3%. The NASDAQ Composite Index is down 319, a decline of 2.4%. 10-year yield 4.94%, with a 2-year that's yielding 5.11%. Spot gold up $11 the ounce to $19.82, up 0.6%. And West Texas Intermediate crude up 1.9%, $85.30 for a barrel of WTI. After the bell today, we will be getting earnings from Meta Platforms, down now by 4%. Also reporting after the bell, IBM down by 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
If you're just joining us, we have a lot to catch up on. We now have a Speaker of the House. It actually happened. Mike Johnson, Speaker number 56, is official. He just spoke to the House of Representatives and will be speaking to reporters momentarily. Support from the full conference. Nothing like what we saw for Tom Emmer, Jim Jordan, Steve Scalise. Not a single no vote as he moves forward with the message of unity here in the Republican conference. We'll see if governing will follow. Apparently, as Michael McCall told us over a week ago, Congressman who chairs the Foreign Affairs Committee in the House, the first order of business will be bringing a resolution to the floor condemning the terror attack by Hamas against Israel and supporting Israel as we move forward here. Separately, Joe Biden, speaking earlier today in a bilateral news conference with the Prime Minister of Australia, speaking to this request for funding. And this is important because we've talked a lot about it through the guise of Israel and Ukraine. This is the $106 billion he's asking for in supplemental funds, but also send money to Taiwan and to our southern border for border security. But Bloomberg government reminds us there's more to this as well. Inside that budget request also includes money for the submarine industrial base as part of our alliance with Australia, remembering this pact between the U.S., the U.K., and Australia to counter China's military expansion. This would help to pay for that. And it's something that we want to talk about, among other issues, with Jennifer Welch, Bloomberg Economics Chief Geo-Economics Analyst. It's great to see you, Jennifer. As someone who, of course, comes out of the national security space, we're juggling a lot of priorities here, but they all seem to be, when it comes to our defense, included in this supplemental budget request. How important is that money for the submarine program with Australia?
Well, thanks so much again for having me on, Joe. It's a pleasure to be here. It's incredibly important. One of the challenges that AUKUS has faced, and this was brought up during the press conference that President Biden just had, was the issue of congressional support for it. And one of the main areas of concern for Congress has been the DIB issue, as you noted. And the problem there is that the submarine deal includes transferring Virginia-class subs to Australia, but right now the United States is struggling to reach its goal of making 2 Virginia-class subs every year. You add on top of that the need to sustain our forces and to transfer to Australia, and there's a question there of whether or not we can do both these things at the same time.
Of course, we're asking for $60 billion for Ukraine. We're asking for billions more in Israel. And the president did speak to the situation in Israel. Here's what he said, Jennifer, and we'll have you respond. This is Joe Biden a short time ago in the Rose Garden.
The anger, the hurt, the sense of outrage that the Israeli people are feeling after the brutally inflicted devastation by Hamas is completely understandable. Israel has the right, and I would add a responsibility, to respond to the slaughter of their people. And we will ensure Israel has what it needs to defend itself against these terrorists. That's a guarantee. Yet
we're asking Israel to slow its roll and, in fact, delay the invasion of Gaza. The headline on the terminal, Biden asking Israel to delay ground war if it helps to free hostages. And there's been talk about a potential release of more hostages here. Is that what we're waiting for, Jenny, or are we potentially going to be in a world where there is no invasion of Gaza?
That's a really good question, and it does seem to be a fast-moving target in terms of, what Israel's saying in terms of their plans for the ground offensive, kind of changing day by day. More recently, they've kind of moved away from referring to it as an invasion and more towards an operation, saying that it's going to be a lot more targeted. And I think there's a couple of factors at play. I think certainly the ongoing hostage negotiations are part of it. Certainly U.S. concerns are part of it, and as part of an effort to avoid this from becoming a broader regional conflict and kind of stirring unrest across the Middle East. But I think Israeli forces are also very concerned about having to fight on multiple fronts. Already they're taking incoming from Hezbollah forces. I think there's some concern about whether or not they have the bandwidth, in particular air defense bandwidth, in order to manage additional incoming coming from Hezbollah if they start to increase the scale of their attacks to take advantage of a ground offensive. And then there's the complexity of the ground offensive itself. Gaza is obviously a very dense area. There's also the potential for many, many tunnels that we don't have great insight into for Hamas fighters to be hiding in. It could be a very dangerous operation. And I think the United States, as well as other partners, have been counseling Israel to really carefully plan that out and to plan out for what happens after the offensive. Their goal is to remove Hamas, but what happens after Hamas is gone?
A lot of good questions here. The president saying earlier today in the Rose Garden, what I've indicated to him, by that he means Benjamin Netanyahu, is that if that's possible to get these folks out safely, that's what he should do. It's their decision. But of course, Benjamin Netanyahu doesn't want to lose the U.S. in this fight. How closely is he listening to Joe Biden?
I would say compared to where we were soon after the October 7th attack and where we are today, again, that ground offensive hasn't happened. It seemed to be on the verge of it, several weeks ago now. We've seen Israel kind of budge a little bit on making sure aid is flowing into Gaza. We've seen them, start to address concerns about civilian casualties, include coming out very clearly on the nature of the hospital attack that happened last week. So I do think that Israel is listening to the U.S. I think also U.S. regional support has been helpful to sort of reassuring Israel, both the presence of U.S. forces in the region, as well as U.S. efforts to try and line up regional powers to at least, if not at the very least support Israel, then to at least, kind of decry the attack and not foment or add fire to the flame. So I think all of that is helping sort of take us down a step or two, at least temporarily, in the conflict. But it remains to be seen, where Israel goes from here. And I think the Biden administration is being very careful to at least publicly indicate that this is still very much within Israel's agency rather than being directed by the U.S. That being said, I think behind closed doors, the U.S. is very much counseling Israel to approach this in a way that is both good for Israel strategically and in the long term, but also helps avoid further inflaming regional tensions.
Jenny Welch helps to advise our Bloomberg economics team here in Washington, and it's great to have you back, Jenny. Thank you for the insights. Jenny Welch at Bloomberg with us on Sound On. As we move forward here with the Speaker of the House, Dare to Dream. It's true. If you're just joining us, Joe Biden will soon be talking to Speaker Mike Johnson We'll let you know when that phone call takes place. I'm Joe Matthew in Washington with some final thoughts ahead. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Apple is planning an end-to-end overhaul of its AirPods lineup, refreshing a product category that has emerged as one of the company's biggest sellers. Apple shares right now are down 2.4%, all of a part of a broader technology sell-off today. Apple, though, is raising prices of its Apple TV Plus, arcade gaming, and News Plus subscription services in a move that could generate more revenue for its increasingly key services division. Tech earnings are front and center. Right now, we've got Google, Alphabet shares down 9.8% after last night's earnings report. Microsoft, though, up 2.8% after earnings. After the bell, we'll be hearing from Meta Platforms and IBM. Patrick Frusetti is Managing Director at Hightower Securities.
So what we're looking for with some of these tech earnings, of course, they're mixed. You know, Microsoft was pretty solid. We saw some growth in Asia and cloud, and Google was really the opposite. So we'll see how the rest of these come out as the week goes on.
And you can hear more of that conversation on the Surveillance Podcast. You can download it wherever you get your podcasts. Some of the other stories that we're following: Boeing has lowered its annual target for 737 aircraft deliveries as the U.S. planemaker grapples with quality shortfalls afflicting its top-selling model. Boeing shares, member of the Dow, down now by 1.7%. And those are some of our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Let's get a check on world and national news now. Nancy Lyons joins with details from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Congressman Mike Johnson is the new Speaker of the House after weeks of Republican wrangling. He says it's time to hit the ground running.
We've learned a lot of lessons, but you know what? Through adversity, it makes you stronger. And we want our allies around the world to know that this body of lawmakers is reporting again to our duty stations. Let the enemies of freedom around the world hear us loud and clear. The People's House is back in business.
Johnson, in his floor acceptance speech, also said the first bill he'll introduce will be to reinforce America's defense of Israel. The final tally today in the Speaker vote: Johnson received 220 votes to House Democratic leader Hakeem Jeffries' 209 votes. Israeli forces continue to strike Gaza in response to the unprecedented attack by Hamas that left about 1,400 people in Israel dead. Prime Minister Benjamin Netanyahu vowed to eradicate Hamas from Gaza. But what happens after achieving that goal? President Biden says there's only one way forward.
When this crisis is over, there has to be a vision of what comes next. And in our view, it has to be a two-state solution. It means a concentrated effort from all the parties, Israelis, Palestinians, regional partners, global leaders, to put us on a path toward peace.
President Biden, speaking at a joint news conference with Australian Prime Minister Anthony Albanese, also called on Israeli settlers in the West Bank to stop attacking Palestinians. The Senate Foreign Relations Committee has approved Jacob Lew to be the ambassador to Israel, moving quickly to get him in place during Israel's war with Hamas. The panel voted 12-9 today to move Lew's nomination to the Senate floor for a final vote as early as next week. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Joe.
Okay, Nancy, thanks. Indeed, four is the charm, as Nancy was just saying in the speaker's battle. The question is, when will Speaker Johnson get together with Hakeem Jeffries? Might not be today. He's got a news conference. He's got messages of unity within the Republican conference to deliver, but he is suggesting that it'll happen.
I do look forward to working with you on behalf of the American people. I know we see things from very different points of view, but I know that in your heart you love and care about this country and you want to do what's right. And so we're going to find common ground there, all right?
There we go, with a smattering of applause in the House. It was mostly one-sided as he spoke to the House of Representatives. The next big stop here in Washington is a state dinner tonight. I've been referencing it for the past couple of hours, but the president meeting today with the Prime Minister of Australia in a bit of a makeup. Remember, it was during the whole debt ceiling matter. He had to cancel his trip over there. So they invited Prime Minister Albanese to Washington, and that's the big event today outside of the speaker's race with a state dinner set tonight. Tents are up on the South Lawn, and we know what they're going to serve on the menu this evening. From guest chef Katie Button, a menu featuring butternut squash soup, a roasted beet salad, and sarsaparilla braised short ribs. Sounds pretty darn good to me. What will not be served? The B-52s, the last-minute change in entertainment, according to the First Lady, Jill Biden, yesterday at the White House.
And while we had initially planned for the legendary B-52s to perform their iconic dance and party music, we are now in a time when so many are facing sorrow and pain. So we made a few adjustments to the entertainment portion of the evening. The band will attend the dinner as guests.
But they won't be playing so no rock lobster on the menu. Instead, the president's own Marine Corps band and the strolling strings from the Air Force and Army. We'll let you know how the state dinner goes when we meet back here tomorrow. I'm Joe Matthew in Washington. Kaylee Lyons will be back with us, we like to think, and we'll have the latest from another historic day in the nation's capital. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Live, we are here at Schwab Impact 2023, and we are surrounded by so many members of the investment community, registered investment advisors.
I think everybody's here.
I think everybody.
I haven't even walked the full floor yet, Carol, but everybody's here. Also, a lot of people have come up to me to say hi.
They have. It's really pretty.
These are our people.
These are our people. It is Wednesday, October 25th, 2023. We are live at the Philadelphia Convention Center, Schwab Impact 2023. We have seen an interesting market. We've got stocks down, yields up again. Investors mulling over kind of a mixed bag of earnings from those mega cap names, a couple of them. We have another big one after the closing bell. A lot of worry, a lot of volatility, although we did get a Speaker of the House. Finally.
Yeah, markets don't seem to care about that. The Nasdaq down 2.4%. The S&P 500 down 1.45%. The Dow Jones down 0.3%. Volatility and worry over the outlook. What's happening in the Middle East? It's all on our minds.
Got to tell you, we are really at the perfect place to be considering all of the questions that are out there when it comes to the markets, the volatility. So coming up in just a moment, Rick Wurster, he's president of Charles Schwab. We're going to talk about the environment dealing with this 5% U.S. interest rate environment, really pretty much all along the curve, how investors are reacting to that and how they are managing their own financial investment firm.
Yeah, we're also going to be speaking with Kathy Jones, Managing Director and Chief Fixed Income Strategist at the Schwab Center for Financial Research. Talk about today's rates environment. You mentioned what bond yields are doing, Carol. And then, of course, what's going on with fixed income. Speaking of, the popular person at the ball, the bonds.
I'm just curious.
The bonds.
The bonds.
They're bonds.
Also from Schwab Impact, Joe Grogan, he's head of distribution over at Wisdom Tree. They work with some of the largest custodial platforms. So good, big, large perspective, maybe seeing the trends, the stress points, see what he has to say.
We'll also check in with Ben Kirby, co-head of investments and portfolio manager at Thornburg Investment Management, who oversees some consistent top performers.
I was looking at some of the funds, and they really have been doing well longer term. Plus, we talked about the race for a U.S. House Speaker. We finally have a House Speaker. We're also going to get into how corporate America is a new battlefield, and this is with a former Trump data scientist. He is key to navigating the culture wars. It's another battleground, if you will, when it comes to companies and dealing with kind of what's out there among the public and views on different things.
Yeah, this is the latest from Josh Green for Bloomberg Business Week, our columnist over there. Looking forward to speaking with him about that. Carol, we talked about a big company reporting after the bell. It's Meta Platforms.
It's Meta
We'll
Platforms.
be all over those earnings with John Ehrlichman, too.
Absolutely. Watching the trade in the aftermarket. And Ron Shake's going to stop by. I haven't talked to him in years, but you'll know who he is. He founded Panera, Au Bon Pain, and he is investing now in the restaurant space, looking for, interesting ideas, trends, and so on and so forth. Kava is one of those.
Yeah, one of the companies that recently went public.
He's got a new book out. Know what matters.
Is he going to bring food?
I don't know. You're always hungry.
I'm always hungry.
All
I
right,
got some fast casual here anyway.
He does. All right, a lot going on. Looking forward to reporting from here. First up, though, let's get a check on your top business headlines and look at today's trade. Let's turn things over to Charlie Pillett.
All right, thank you very much. Lots going on right about that, Carol Massa. You mentioned Meta down now by 3.8% ahead of earnings. IBM also after the bell today down 0.7%. Yes, red on the screen, but look at the year-to-date column on the Dow Jones Industrial Average. It is red, down 0.3%. All of this year's gains for the Dow have now disappeared. The Dow right now down 109, drop there of 0.3% today. S&P down 61, decline there of 1.5%. The Nasdaq Composite Index down 318 points right now. That is a drop of 2.4%. 55 minutes to go ahead of the closing bell. Lots of selling in this final hour of trading. 10-year yield 4.95% with a 2-year 5.11%. Spot gold up $10 the ounce, higher by 0.5%. And West Texas Intermediate crude now up 2%, 85.41 a barrel on WTI. After earnings, Microsoft higher, Google lower, and you cannot ignore artificial intelligence in their reports, according to Ethan Devitt, the Chief Investment Officer at Moneta Group Investment Advisors.
The signal is clearly that AI is the new arms race, and we've seen evidence of that for some time. The cloud migration perhaps is old news, so clearly there was a lackluster response to that out of Alphabet. So now it's all about AI. We know where the consumer is heading. We don't know anything about the transformative effects it's likely to have, but we know that when we talked in the years past about that cash that was building on corporate balance sheets, now we know where some of it is earmarked.
And you can hear more of that conversation on the Talks podcast. So again, recapping, stocks are trading lower. Meta and IBM after the bell. Amazon to report tomorrow, and the Dow negative on the year. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I did not know that.
All right, we'll talk about that later.
I should know that. I'm a tennis fan.
Today, it's a gift, though, to Schwab, because this is where we find ourselves at Impact 2023. There's so much going on. A good reason why investors are amazed that something hasn't broken in the economy yet, because the last time U.S. government bond yields climbed so far, so fast, the nation plunged into back-to-back recession. So that is part of kind of our backdrop. Let's get to it, though. We are here in Philadelphia at the Philadelphia Convention Center at Schwab Impact 2023. And with us is Rick Wurster. He's president of Charles Schwab. I want to say thank you for joining us, but thank you for having us.
Well, thank you for having me on. It's delightful to be here.
It's great to have you here in a day where I kind of laughed with you. It's a shame nothing is going on, but it's a really interesting environment. Geopolitically, obviously, we're front and center, watching what's going on around the world, but also within the investment environment. How do you make sense, you and your team, back at Schwab, about kind of how to prioritize what investors are going to care most about and what's going to impact your world specifically?
Sure. Well, certainly, when we think about the global events, the first thing I think about is the human suffering and the difficulties that a lot of people have had to endure recently. From a market standpoint, we want, that volatility can be challenging to clients. And one of the things that we say in an environment like this is seek out an advisor. And we're sitting here, of course, at our 33rd annual Impact Conference for advisors, and they help clients thrive through environments like this. So it's a challenging environment for the world. Certainly it creates uncertainty and some volatility, but I think advisors can help a lot of our clients through periods like this.
What are you hearing from advisors right now about the questions that their clients have? I mean, we're not only in a challenging world for financial markets, but we're in a challenging world for advisors. They're robo-advisors. I mean, Schwab has its own robo-advisor with Schwab Intelligent Portfolio. What are you hearing from these people whose businesses are being challenged right now?
Well, the thing I would say about the advisor market is that there's a bull market for advice. More and more clients, because of everything that's going on in the world, because of what's happening in markets, because people are trying to integrate markets into taxes and their trusts, their estates, passing wealth along, there is a bull market for help and guidance. And so it's a market in which advisors are thriving, and the area is really growing.
Rick, what's the most interesting demographic in terms of the investing public right now for you guys?
Well, to me, it's got to be the baby boomers. The baby boomers have amassed a lot of wealth, and more are retiring every day, and they want that help and guidance to help them get through retirement and navigate all the things in front of them. So to me, that's the most interesting demographic. But at Schwab, we want to meet the needs of every demographic, whether it's a young investor, a baby boomer. We need to be exceptional at meeting the needs of all of those different demographics.
Yeah, it's kind of interesting, right, for like a younger investor. We talk a lot about, we had a guest on this past week of just, trying to assess, are we in a recession? And while technically the numbers that we've got growth in the U.S., strong consumer spending numbers still, retail sales numbers.
Employment is strong.
Employment is strong. Having said that, she said, I'm coming from Wisconsin. Again, somebody who manages money. She said, yep, they're working, but folks can't buy a home because they can't afford it with the mortgage rates. They've got $1,000 a month car payments. So they, in essence, feel like it's a recession for them. So I'm just curious, from your people who want to invest with you guys and work on your platforms, What is it that they're doing? Looking to save money, conserve principal, or be more aggressive in this environment because they see some opportunities amid the volatility?
Well, first, to the first part of the question, there's no question this environment has been difficult for investors and difficult for people trying to live in the world. There's been a lot of inflation. The Fed has raised interest rates dramatically and quickly, but that was after letting inflation run a little bit. And so it has squeezed individuals. At the same time, markets are not that far away, particularly the S&P or the NASDAQ, not far away from all-time highs. So there is a lot of wealth being created along the way. And from our perspective, we're here to serve all investors. Our goal is to help clients navigate their financial life, to make them better off, and help them get to where they want to be.
But do they want to be more conservative in this environment? Like, I'm just curious, in an environment where we talk, a money market pays you,
right.
You know what everybody keeps saying.
More than 5%.
Why not put it there, right, without the risk?
Yeah,
I'm just curious what you're seeing in terms of those trends.
Yeah, I would say that the call volumes on our fixed income line have gone up 10 times what they were about 18 months ago. So there's no question that there's a lot of interest in yield right now. And why not? You can get a 2.5% real yield on the 20-year now. I think you have to go back quite a while before that was the case.
Kind of folds perfectly into my next question, which is about the business and about cash in the business. Schwab recently reported earnings, deposits down 28% in the third quarter. It was better than analysts' forecast. Still, though, a drop of more than $284 billion. How much money do you see staying in the Schwab ecosystem right now, even if, cash sweep is occurring, but people can get, more than 5% in money markets?
Well, what I would say is we want clients to do the right thing for them in their situation. We bring all, the clients leave cash in their accounts. We leave it there until we know what they want to do with it. And so they make a decision that they want more yield, they should go and do that. So the money leaving our bank, it's staying at Schwab. It's going and buying government bonds, or it's going into a money market fund. But that money is staying at Schwab, and it's going to places where it can earn higher yield.
Then why were deposits down so much if it's staying at Schwab?
Because it's coming out of our bank and finding its way into higher yielding money market funds or fixed income investments. And that's exactly what we would want for clients. It's not the best thing for our profits, but we want the best thing that's for our clients. And so that money movement is healthy for our clients.
Right, banking key to revenue, right? We know that, right, from the last earnings report. Is money still continuing to come out of that unit?
Well, what I would say is that if you think about what's happening, clients are looking at, if you went back to when interest rates were quite low, they would have a lot of cash in their portfolios, and they would say, there's no need to move this cash. Mm-hmm. I'm just going to leave it here. It's going to earn zero here. It's going to earn zero anywhere else. As the Fed has lifted interest rates and yields are now more attractive, people have looked at their balances and said, well, gosh, why would I leave it here earning less unless they need it to transact or they know they're going to spend it on something. But for the portion of their cash that they know is longer term cash, they can get more yield somewhere else. So it's moved. And I would just wrap up by saying, we think a lot of the movements have occurred because that yield's been high for a while. So people have made that transition, and we're starting to see a strong deceleration of the pace of cash realignment.
So still coming out, but at a slower pace.
Much slower pace. In fact, last month was the first month where in our bank sweep, we saw a positive growth in banks. So more money coming into the bank than leaving the bank for the first time in a while. So from a business standpoint, that's positive. But again, what we want is clients to find the right investment for them.
Does it make you nervous, though, as we get ready for a GDP report that's backward-looking, mind you? Another read on inflation, that in terms of what that could mean for monetary policy. We do think we're getting close to a peak in rates, but nonetheless, whether, again, if we see signs of inflation, if we see more signs of growth, whether or not that means ultimately you're going to see more money coming out because the money markets just kind of get more and more attracactive.
Yeah, it could be. We're back in one of these cycles where bad news is good news. I feel like we might be back in that because good news may lead to a higher rate environment. That could be, could hurt the economy, certainly.
Okay.
So, what about creating new products that help people keep their cash at Schwab? I'm wondering, there are so many high-yield accounts available at other financial institutions right now. What are the conversations happening behind the scenes about creating those sorts of products at Schwab?
Yeah, what I would say is we have all kinds of cash products for clients, and we're not having an issue with cash leaving the firm. We've brought in over $200 billion of net new assets to the firm, and a lot of it has found its way into fixed income or money funds. The issue is just where they're saving it, but it's not leaving the firm. So I think there's no better place and no broader array of fixed income and money funds than we have at Schwab. So certainly we always want to bring out new and relevant products. but we're doing a really nice job today of keeping those clients here at Schwab.
But impacts the top line growth. Will you be,
Certainly
will you be
impacts the
happy
top
when
line.
this 5% rate environment is over?
Well, I don't know, 2.5% real yield. I feel like that's not a bad deal for savers.
I want to ask you about your tenure so far, right? You came in around 2017, 2018. I'm just thinking about kind of where the world was at that point. Not too shabby, right? And then all of a sudden we move into a Fed starts to raise rates, the pandemic hits. It's a whole other world, right? The Fed cuts dramatically. We have the economy, everything just shuts down. And then we see markets bounce back in a big way. I mean, how do you think about kind of our visibility going forward in terms of the market environment? Do we really have a good grasp, or is it hard to, considering that trajectory and trying to figure out kind of what happens after a pandemic and all of the stimulus and crazy activity that went on?
Well, we've certainly seen a lot in the last 5 or 6 years, haven't we?
Yeah.
A pandemic.
Your timing was good.
Yeah, all kinds of different market environments. Our advice to clients at Schwab is to come up with a plan, stick to that plan, and if you need help, seek the help of an advisor who can help guide you through it. But we believe it's hard to time the markets and to outthink what's going to happen. Are we going to be in a recession, not in a recession? Of course, we have an opinion on those things, but we're not always right. And we want investors to stay the course, have a plan, stick to it, and work with an advisor if that makes sense for them.
What's your opinion on where we're going?
On the markets?
Yeah.
I mean, I think at some point monetary policy has to lead to a more restrictive economy. But
recession?
But we'll see.
Recession or soft landing?
I am not an economist. I'm not going to make that call. But listen to Liz Ann Saunders or Jeff Kleintop. They do a really nice job of calling the markets and the economy.
As someone who manages, though, and is very part of the C-suite right here, who covers, and runs this company, what's top of mind for you guys? Whether it's employees, whether it's cost cutting, what is it?
To me, it's opportunity. We have so much opportunity to delight our clients and make them better off in their financial life. What I worry about at night is, are we doing enough, and are we doing it fast enough? I just think we are blessed to have 35 million clients that we serve on a daily basis, and I want to make sure we do everything in our power to make them as well off as they can be.
Can you talk a little bit about customer service? I have, full disclosure, I'm a Schwab client, so I've experienced.
Thank you for your business.
And one thing that is notable, it's like, to me, it's like, Carol, when we talk about American Express.
Mm-hmm.
You call Schwab and a person answers. You call American Express and a person answers. Can you talk about the investments that you make in customer service so people have those interactions just in the last minute that we have?
Yeah, client service is critical to us. It's one of the things that really differentiates Schwab from some of our competitors. We've answered the phone this year on average in less than 30 seconds. I can't get anyone to pick up my phone call in 30 seconds, certainly not my teenage daughter. So we
got to text her.
Yeah, we make it.
So sad.
Yeah,
It's so true.
It's really important to us that we answer the phones, that we're there for the clients, and that we're delivering what they need. We are a client-focused business. We only succeed when our clients succeed.
So no worry about AI taking over?
AI is going to be really helpful to all those people answering the phones. I think they're going to make them more efficient. They're going to help them get an answer
As
to
an
you.
As an assist.
They're going to help you get an answer more quickly. They're going to help you get a better answer, but they'll be in the background supporting that person you're talking to.
All right, love to hear that rather than taking over. Rick, thank you so much. Really appreciate it. And
Thanks for having me on.
Thank you for having us. Rick Wurster, he's president, of course, of Charles Schwab, on site at Schwab Impact. We are just getting started, though, on this Wednesday. Carol Master along with Tim Stanovic, and you are listening and watching Bloomberg Business Week.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. Close to session lows with the Dow, the S&P, and NASDAQ all in the red. Dow Industrials now negative on the year. Wall Street's grappling with a batch of corporate earnings. That has sent stocks lower amid heightened Treasury volatility as traders also keep an eye on the latest geopolitical developments. Right now, the S&P 500 index is down 59, a decline of 1.4%. The Dow down 80, a drop right now of just about 0.3%. NASDAQ, though, particularly hard hit. We've got the NASDAQ Composite Index down 316 points, down 2.4%. Alphabet, parent of Google, down 9.5%. Microsoft, though, in the other direction. Microsoft, after earnings, up by 3%. 10-year yield, 4.94%, with a 2-year that's now yielding 5.12%. Spot gold up 11.30 right now to 1982, a gain there of 0.6%. And West Texas Intermediate crude 85.51, higher by 2.1%. So what about the overall market backdrop? Rick Wurster is the president of Charles Schwab Corp. He was interviewed moments ago right here on Bloomberg Business Week at the Schwab Impact Conference in Philadelphia.
There's no question this environment has been difficult for investors and difficult for people trying to live in the world. There's been a lot of inflation. The Fed has raised interest rates dramatically and quickly, but that was after letting inflation run a little bit, and so it has squeezed individuals. At the same time, markets are not that far away, particularly the S&P or the NASDAQ, not far away from all-time highs. So there is a lot of wealth being created along the way.
And today, the S&P down by 1.4%. You can hear more of that conversation on the Bloomberg Business Week podcast. This update brought to you by Glenn Mead. Glenn Mead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. Again, recapping, we got the 10-year at 4.94%, 2-year 5.12%. The Dow negative on the year, S&P down 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, one of the most read on the Bloomberg terminal earlier this week, all about the challenges that active asset managers are facing. Carol, even Matt Levine wrote about this in his column on Monday. Across the $100 trillion asset management industry, money managers have been confronted by a tectonic shift when it comes to investor appetite. They're looking for cheaper, passive strategies, at least
heard this before, right?
Over the last decade.
Absolutely. And now they're facing something even more dire. The unprecedented run of bull markets may be a thing of the past. We've got a good guest to get into all of this, who actually is going to talk about how maybe people want simple investing, which I find really fascinating. Joe Grogan, he is head of distribution over at Wisdom Tree. He works with some of the largest custodial platforms that are out there. He's here on site with us in Philadelphia. Wisdom Tree, by the way, it's an asset management firm. You know who they are. They offer up a lot of ETFs and are among those financial firms filing for a spot Bitcoin ETF, which I'm really interested in.
We'll spend the whole interview talking about Bitcoin.
Well, Joe, how many people come up to you and they're like, let's talk about that Bitcoin ETF?
Well, first of all, thank you very much for having me.
You're welcome.
It happens quite a bit. It happens at the booth. It happens pretty much everywhere we go. And the same answer. It's right now, we really can't speak to that.
Is there interest?
Even a little bit?
Well, talk to me about interest around the product. Speak about that. I mean, have you ever launched a product that has had this much attention, this much interest?
It's certainly overwhelming, for sure. The amount of interest it gets, for whatever reason that may be, it's out there. It's pretty amazing. It's a lot of interest. Maybe not that much of an appetite that we've seen in the U.S.
Yeah.
But there's certainly appetite in Europe and Canada. We've seen it. We have a few in Europe. But as far as the launching the one in the U.S. goes, I leave that with our lawyers and our general counsel until we get through the SEC.
Can we just say, though, is it going to be like cannabis and the oversight? Like, is it going to be is it something, or do you feel like there's a lot of attention now to try and kind of figure this one out?
I think you've seen a lot of attention, especially with the rise in the last week or two. I mean, it's been amazing to see a meteoric rise in crypto. And what does that mean for the average investor? I mean, to your original comment about simplicity, how do you make that simple?
Well, that's why I'm trying to get my head around those two things.
Absolutely.
And we talk to a lot of folks in the digital world, if you will, Bitcoin world, crypto world, and they're like, it's so pure and all those things, but it's complicated.
It's extremely complicated.
You don't have your cold storage all set up, Carol?
I do not. So tell me this, interest and desire for things more simplistic.
Yeah.
And then you have this.
Well, let's put crypto aside and talk about simplicity and what that means. I mean, we're seeing this huge shift towards simplicity away from the real complex type of investment strategies. And I think the biggest reason behind that is the average consumer or the investor, they can't understand these products. They can't manage them. So how are they going to actually try to understand them, work with them, and put them in their portfolios? So as we go to a simpler process, a simpler type of formula, it doesn't mean we're losing sophistication.
Well, that's what I want to ask. What do you mean they want a simpler, what is it? Are you talking about the process itself or the investment itself?
It's more the investment itself.
Okay.
Right? They want to understand the underlying investment, how it works. Back in the days, over the last few years, we've seen a lot of option-based strategies, a lot of derivative-type strategies. Very complicated, very tough to understand. If the market goes up, these go down. How does that work? Now it's really, well, what about the traditional stock and bond portfolios? What about these portfolios that we can better understand?
That's what people want?
Well, they're looking for that. They're looking for the quality-type investments. We're seeing a big shift to quality on our business. That's what they're looking for.
If people don't understand something, does it belong in their portfolio?
It's a great question.
I know what Warren Buffett would say.
He'd say no. Yeah, it's a great
Peter
question.
Lynch would have said it, right? Decades ago.
Absolutely. Peter Lynch, I used to work at Fidelity for quite a while. And, he always said if you can go into a store and you see buyers buying those products, that's probably the investment you want. That's simple of a philosophy.
All right, so where does that go then if we get a little bit more simpler, plain vanilla? What does it mean?
Well, I think you're going to see people, having the core part of their portfolio really based around a real simpler type investment style. And then they'll take a smaller percentage and maybe go to the alternative side or go to the crypto side or something of that nature.
Well, this is what's interesting, too, because I think about, Tim and I have been at Milk in the last couple of years, and it's all about private markets.
Absolutely.
Private markets and private jets.
To
be fair.
That's okay. That's really well said. But I mean, I guess it's simpler. It's just lending, right? Outside the kind of traditional infrastructure. Is that part of the simpler investing demand?
Well, you're also talking about a very high net worth demographic over there.
Yep.
So they do have access to those portfolios. Your general population generally doesn't have access to those portfolios.
But should they? And is there demand, interest?
I do think there should be a democratization of certain products, and I think should be brought down to the lower level, of course. And I think that's what WisdomTree is very good at, is trying to provide access to different types of asset classes, benchmarks, et cetera, in a simplified way.
So talk to us about model portfolios. Getting a ton of attention right now.
Yep, absolutely.
Well, first of all, explain what they are to people who might not be familiar with model portfolios.
Model portfolios are, there's not an advisor out there that doesn't run a model portfolio for their clients. A person may be invested with an advisor, and they're going to be in a model portfolio. It's scalable, it's efficient, but also it's risk mitigating. So, and what I mean by that is the advisor, whether they do it themselves, outsource that, they would look at investing in 60% equities, 40% bonds, and of that mix, there might be, some growth equities, value equities, but really, they build a portfolio that can withstand different cycles. We're seeing a pretty ugly market today, and I can guarantee you, if you were just holding a singular stock versus a model, the model would fare better today. So it's just from a risk standpoint. Now, granted, if that model was just all hyper-growth securities, whatever, and not really a true diversified model, they might have difficulty.
I do wonder about how much, in a zero-rate environment for so long, everybody got a little bit lazy, right? And also, this idea of, principal preservation kind of went away because you just didn't need to think about it. It's a different environment.
Anybody could have made money in the last 10 years. If you didn't make money in the market in the last 10 years, you did something wrong, real wrong.
Right.
Nowadays, where you're seeing fixed income actually provide a return, I saw a study today that said cash has the best return of the last 12 to 18 months. So that's a much different dynamic than, say, 10 years ago or 2 years ago, where it's just all growth funds all the way.
Right.
Now, if you're not invested in very ultra-short-term fixed income or cash products to balance everything else off, you probably have a negative portfolio.
What's the biggest question you're hearing from your clients right now?
What do I do?
What do you say?
What do I do? Or hey, what do you actually do?
Exactly. It is.
What are you doing?
Listen, our advisors, they have limited access to certain things. They're too busy managing their relationships and helping their own company grow to really get a deep look at the market. So they rely on us, whereas we have a group of 30 individuals that in our research department that all they do is watch the markets and try to understand how can we better place our investors, our advisors, into products that will withstand the test of time.
What's the time that you refer to, though, in past history that's similar to this cycle? Or is there nothing to go back to? Because I feel like anybody who's seen a lot of cycles is a lot more sanguine about kind of where we are today.
Are you saying that I've seen a few? Is that what you're saying? I have seen a few.
I've seen a few too. But I do think it gives you some perspective. We've got about 30 seconds back. But I do think about how you lean on anything that we've gone through.
The last 3 to 5 years is much different than anything we've ever seen.
Yeah.
Everything went up. And much different. You really have to take a longer term perspective to understand what the market cycles go through, because it's been a fictitious market cycle the last 5-8 years. Mm-hmm. So if you go back further than that, you'll get a better understanding of what market cycles should look like. Okay. What's normal.
Is there one that you refer back to?
Not really. It depends on the asset class.
That wasn't helpful.
It depends on the asset class. If it's fixed income, I'd say go back 10 years. If it's growth, go back 5.
More optimistic, more pessimistic right now in terms of the investment outlook? Just got about 15
Cautiously
seconds.
Optimistic.
That's not an answer. This was fun.
Thank you very much.
Really appreciate
your time.
Yeah, so much.
Thank you. Joe, good to see you. Thanks so much. Joe Grogan is head of distribution at Wisdom Tree. He's with us here at Schwab Impact in Philadelphia.
All right, folks, we're going to send it back to our newsroom in D.C., get a check on world and national news, and we're going to send it off to Nancy Lyons. Nancy, take it away.
Thanks, Carol. The House of Representatives finally has a new speaker, Congressman Mike Johnson, who had the endorsement of Donald Trump and also support from all factions within the House Republican caucus. We get more from Bloomberg's Irv Chapman.
Johnson gave an acceptance speech voicing his religious faith, his patriotism, and some of his agenda.
We want our allies around the world to know that this body of lawmakers is reporting again to our duty stations. The first bill that I'm going to bring to this floor will be in support of our dear friend Israel, and we're overdue in getting that done.
Johnson said he'd seek to control the Mexican border to bring down inflation by reining in federal spending and to create a bipartisan commission to deal with the national debt. In Washington, Irv Chapman, Bloomberg Radio.
President Biden says he will continue to work across the aisle with Johnson, and he adds the American people have made it clear they want House Republicans to work with him. It's another fine for Donald Trump in his civil fraud trial after he violated a limited gag order against disparaging court staffers. The judge issued a fine of $10,000 after Trump had said remarks earlier today outside the courtroom.
Very partisan judge, with a person who's very partisan sitting alongside of him, perhaps even much more partisan than he is. So we are doing very well. The facts are speaking very loud. He's a totally discredited witness, and you haven't seen anything yet.
Trump's attorneys allege their client was not talking about court staffers, but his former lawyer and fixer, Michael Cohen. Being an Amazon warehouse worker may be more dangerous than you'd think. A study from the University of Illinois at Chicago found more than 2/3 of those warehouse workers who were asked said they took unpaid time off to recover from pain or just exhaustion from the job. About a third said they had to do it at least 3 times. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, and NASDAQ very much in the red. 20 minutes to go ahead of the closing bell. And the Dow now negative on the year. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading in the red with NASDAQ really under pressure. Dow's currently down 62 points. S&P's dropped 56, and NASDAQ is lower by 2.3%. The U.S. 10-year yield climbs to 4.94%. Gold is up 11. Oil trading in the green, and Bitcoin is higher by 2.8%. Among the main 11 S&P sectors, only utilities, energy, and consumer staples were in the green. And leaders to the upside in the Dow, Travelers and Microsoft, while Salesforce fell 3.6% and led to the downside. After earnings, Google had its biggest drop since March of 2020. And in other news, the UAW appears to be moving toward a potential deal with Ford. Wrapping things up, some of the names reporting after the bell tonight include Facebook and ServiceNow. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. We'll be all over those numbers as they break. And to hear live breaking news over your Bloomberg, type Squawk, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got just under 18 minutes left in today's trading session, and we've got another day where we've got stocks down, yields up. And with us here on site at Schwab Impact 2023 is Ben Kirby in the flesh, co-head of investments and portfolio manager at Thornburg Investment Management. They've got some $41 billion in assets under management, and as we said here, how are you? Welcome.
Great. It's a great event. Meeting lots of clients, lots of great presentations.
What do you get when you come to an event like this?
You know, mostly it's a chance to talk to our clients and sort of hear what they're thinking. It's interesting. A lot of people are pretty bearish, pretty cautious. We see it in the market today, but, you know, cash is yielding 5, and so people are pretty interested in putting money in cash, right?
Pretty bearish to the point where you say, oh, maybe it's a contrarian call? Or is it pretty bearish that maybe things are turning for the worse?
I just think, yeah, I think we see the economy slowing. A lot of people see the economy slowing, but also just cash at 5% is attractive to people. So, you know, maybe more than being bearish, it's hey, if I can clip 5% for a medium term, you know, maybe that's the thing to do.
What is the term that people are bearish on? Is it the near term?
So recession risk, I think. I mean, increasingly people are thinking, you know, odds of recession are falling. So, you know, soft landing is still sort of something that people are hopeful for. However, when you look at economists and sort of when you look at many of the leading indicators, whether it's the leading indicator index, global short rates, you know, senior loan officer survey, all of these indicators that historically drive recessions and predict recessions, this will be the first time ever that, like, all of these things are predicting a recession and we don't get one. So, you know, I still think the odds, you know, we think in probabilities, not sort of yes, no. Odds are probably still higher over the next 12 months than over a typical 12 months, right? So I think that people are looking at that, and they're looking at a market that's pretty expensive, and they're saying, you know what, geopolitical risks, all these things, maybe it's best to just kind of sit on the sidelines.
Ben Kirby, when you're back home in Santa Fe, what do people most often talk about, and do you see signs of recession around you?
Probably Hatch Chili's. That's what I think people talk about.
I always ask them about Julia Roberts, but we're not going to go there again.
Yeah, well, 100%. So look, Santa Fe is a bit of an unusual microcosm. This is, you know, it is not a financial hub. The restaurants are still busy. People are still, you know,
they buying art? People are buying art?
People are buying art like crazy, right? So, you know,
Is it tourism or regular economy?
It is mostly tourism. So, you know, Santa Fe is 75,000 people, but we get 1 million tourists a year. So that's an interesting microcosm. People are still traveling, right? So I think we've seen that People spent on goods in COVID, and they're spending on experiences after COVID. Santa Fe is a beneficiary of people traveling to a unique city, spending some money, eating some great food, and then flying back home.
Do you see that? Does it anecdotally, and based on the people you speak to, the people who you live with, I mean, is this happening to the same extent that it happened a year ago? Are people still spending money like they were?
I think the high-end consumer is still doing great.
We hear that a lot.
Yeah,
we do hear that a lot.
Yeah, right? It's not everybody's enjoying the world.
But, you know, all 1 million people who visit Santa Fe are not high-end consumers.
I think the ones who are spending the most are pretty high-end consumers. I mean, if you've ever gone art shopping in Santa Fe, it's pretty significantly pricey.
You don't have to buy something if you go art shopping. You can just look as well, which is what I've done in Santa Fe.
But, you know, on the other side, what we're seeing is delinquencies are increasing among, you know, lower income cohorts. That excess savings that we got from the fiscal stimulus in COVID, there's still excess savings at the high end. At the low end, it's pretty much been spent, and now people are trying to rack up more debt.
You know, looking at some of your funds that you are involved in managing, Thornburg Investment Income Builder Fund, consistently one of the top performing funds in its category. You've got Thornburg Summit Fund, also an outperformer. I am curious in terms of strategy, what's working?
So
I know different funds, I got it. But give us some ideas of some of the strategies that are working for you guys.
So overall, Thornburg, we have 80% of our assets are in 4- and 5-star funds, which is really phenomenal sort of overall, you know, contribution from those portfolios. What's working this year? Income Builder is working really well because even though we've talked about the Magnificent Seven and, you know, those 7 stocks driving the entire market, actually our portfolio is up for the year. You know, many dividend-paying stocks are down. Our portfolio is still performing pretty strongly. And, you know, I think the fixed income is getting the most flows within our business, right? So we have a Thornburg Strategic Income portfolio, which is a multi-sector bond. Yield to worst is about 7.5% on that portfolio. So the argument is you can get cash at 5%, and that's great, but duration is 0. It's gonna have that aspect to it. Or you get 7.5% in our strategic income portfolio with duration of about 3.5-4 years. So if we do go into a recession or a slowdown, that duration will be helpful. So I think that we're seeing a lot of interest in that portfolio, a lot of flows, and it really makes a lot of sense for the market right now.
Where are you not seeing flows?
We're not seeing nearly as many flows in active U.S. equities. I think that's true for the industry. You know, that's turned significantly passive.
Is that a mistake, though? Because I'm trying to think who was on, whether it was one of our in-house analysts or somebody who just, again, the focus is
Gina.
So much on the outperformers, but
Gina.
so much, whether it's of the S&P 500 or below 100-day, 200-day moving averages that haven't really performed. And is that a mistake that if you're actively managing, you could really find some great opportunities?
I think it's a great opportunity. So
brought to you by Thornburg. No, I'm just kidding. That was an assist. Say thank you.
That was a setup.
It wasn't.
So look, the equal weight S&P is much more reasonably valued than the market cap weighted S&P. And also, if you want to look at the valuation of growth versus value, that's at kind of all-time historically interesting levels today. So, you know, if you do have an active portfolio, you can pick individual securities. You don't have to be crowding into the same 7, 10, or 20 names. There are a lot of stones to turn over.
Where would you crowd into within that? Names, sectors, spaces that you think are interesting.
So I would expand outside the U.S. Honestly, I think the U.S. market is expensive, even on an equal weighted basis versus Europe, for example, where you can buy a lot of really great companies at 7 times earnings, 8 times earnings, you know, up to 10 times earnings. And in the U.S., it's 20. So Europe has been at a discount for a long time. It's a bigger discount today. We think it's a really attractive opportunity. And then dividend-paying stocks more broadly at a time when we're in an interest rate normalization and the cost of capital is going to be higher, we think that will favor those big dominant companies
Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 7 minutes to go ahead of the closing bell. We do have the S&P 500 index very close now to session lows. Snap shares down 5.1%. Snap Inc. returned to revenue growth in the third quarter after 2 periods of decline, showing the long-running improvements to its digital ad business are finally paying off. But the company is cautioning, however, that the progress may be blunted in the current period by advertiser delays spurred by the war in Israel and Gaza. Mandeep Singh is a senior tech analyst with Bloomberg Intelligence.
Clearly, the top line print was better than expected, but when it comes to the guidance, the EBITDA number is the key for a company like Snapchat because they keep losing money. So because they had a positive EBITDA quarter, everyone thought it's going to continue, but in their guide, they were quite vague about where the leverage is going to come from, and it was just too uncertain to figure out whether this is sustainable or not.
And again, Snap shares now lower by 5.1%. You can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Meta Platforms set to report after the close of trading today, with Amazon delivering results tomorrow after the close of trading. Meta right now down by 4.3%. Apple is raising prices of its Apple TV Plus, Arcade Gaming, and News Plus subscription services in a move that could generate more revenue for its increasingly key services division. And those are some of our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio.
Everybody, you are listening and watching Bloomberg Business Week. We're live at Schwab Impact 2023 here in Philadelphia. And this on a day where, again, we're seeing some pressure on the equity side of things. We're seeing, again, yields move up. We've got some important economic reports coming your way tomorrow. And then, of course, we've got a big mega cap tech earnings coming after the closing bell.
Yeah, Meta Platforms is what we're waiting for. Apple, though, coming next week, Carol. I want to highlight a story among the most read on the Bloomberg Terminal, an exclusive from our own Mark Gurman. You heard a little bit earlier from Charlie about this. Apple planning an end-to-end overhaul of its AirPods lineup. They're refreshing a product category that's emerged as one of the company's biggest sellers.
Lost without my earbuds.
I am too. So the changes are going to include, here are the details you need to know, okay? The changes are going to include a revamped version of entry-level AirPods. I think those are the ones that you have, Carol, in 2024.
They're not entry-level.
You definitely don't have the pros.
They're not. Yes, I do.
Oh, okay, you do?
Wow, what dis, man?
Wow, okay. Well, good for you, because a new Pro model coming in the next year. Sorry, I thought you had the entry-level ones. I have the entry-level ones.
I had them, and then I got upgraded.
You did?
Yeah.
Okay. All right. The company's also updating the product's earbud design, the look of the cases, and the audio quality. A new version of the AirPods Max headphones are coming in 2024 as well, said the people who asked not to be identified because the information is private. Audio quality, that's an interesting one. You might remember we talked a little bit about AirPods in the last few weeks on air with Romaine, and he mentioned the audio quality of AirPods. And it's true that wired AirPods have much better audio quality than the wireless ones.
I love mine.
And it's all about the way that the sound is coded.
Oh, that's
so
interesting.
I wonder if they're going to be able to figure out a way to make that quality better. And one area where I really notice it is when you're talking to someone on the phone and they're using AirPods, it sounds so much better. And we notice it on our Zooms too.
Yeah.
If they're actually wired into their computer or their phone versus wireless.
My husband hates when I call him and I'm using my earbuds.
Really?
Yeah.
He notices.
He's just
like an audiophile.
He's like,
he
I
gets
can't
it.
hear you. Like, yeah.
He's like, call me back
He's
later.
like, yeah, I'll talk to you when you're home. He really does. It's really kind of rough.
I love that.
Kind of harsh. All right, folks. We've just got a couple minutes left in today's trading session, as we said. One where we're seeing equities under pressure, and we'll see whether or not Meta, which was under pressure following some of the earnings last night, whether or not their
and that
results.
lawsuit as well.
Yeah, exactly. So a lot to follow. We'll break those down as soon as they cross the Bloomberg terminal. We'll have some analysis as well. So don't go anywhere. And more from Schwab Impact 2023 right here on Bloomberg.
I don't hear anything, guys.
We need to hear program.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:58 on Wall Street, just ahead of the closing bell. We do check markets all day long here at Bloomberg. Very close to the worst level of the session right now. Minute to go of trading. We've got the S&P down 60 points right now at 4186. That is a drop right now of 1.4%. The Dow is down 104. There's a decline right now of 0.3%, perhaps lost in the shuffle today. Lots going on, but the Dow is now negative for all of 2023. NASDAQ lower by 315 points, a drop right now of 2.4%. Helping lead the way lower, shares of Alphabet down now by 9.6% after earnings. Microsoft after earnings, though, up by 3.1%. So what about the overall earnings backdrop as we await numbers out of Meta and IBM? And Katrin Peterson is Senior Investment Strategist at BlackRock Investment Institute.
When we look at earnings expectations by market consensus, there is the expectation of earnings in Q3 picking up in the U.S. on a year-over-year comparison. Hence, there is a relatively high hurdle to clear against what has been a very concentrated market backdrop.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcast. So it is a down day on Wall Street for the Dow, the S&P, and NASDAQ, with the S&P 500 index at the closing bell right now down 61 points, a drop now of 1.4%. 10-year yield 4.93% with a 2-year that's yielding 5.11%. Spot gold up $9.50 the ounce to $19.80. That is a gain of 0.5%, while West Texas Intermediate crude is up 1.8%. 85.26. There you have the applause of the New York Stock Exchange as we wrap up the trading day. Boeing, meanwhile, member of the Dow, lowering its annual target for 737 aircraft deliveries as the American plane maker grapples with quality shortfalls afflicting its top-selling model. Boeing shares lower now by 2.5%. Again, recapping, S&P 500 index ending the day lower by 61 points, a decline of 1.4%. 10-year 4.94%. 2-year 5.11%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Good, thank you. Thank you so much for that update, Charlie Pellet. Really appreciate it. Well, let's take a look at how the markets closed and also on the day's trade. Red across the board. We heard the numbers there from Charlie Pellet. Let's get to Bloomberg News equities reporter Alexandra Semenova, who's standing by back at the mothership, the Bloomberg Interactive Broker Studios at Bloomberg headquarters. Alexandra, red across the board. We're also, of course, keeping an eye on what's going on with earnings. Just give me your impression as the markets closed about what this sea of red was all about today.
Hey guys, so great to be on with you. As you mentioned, Tim, U.S. equities falter today as investors weighed a big docket of earnings while also weighing geopolitical developments out of the Middle East. But the big story was results from some of those magnificent 7 companies that have reported so far. And it was really a tale of 2 big tech giants. On one hand, you had Alphabet Inc. reporting disappointing figures from its Google Cloud unit, which is crucial to its business growth story. And on the other hand, you had Microsoft posting strong sales, specifically driven by growth in its cloud business. So 2 totally different stories there. And the takeaway here is up until now, big tech has kind of been moving in lockstep, driven by macroeconomic momentum, AI euphoria. People were looking at these stocks as big, high-quality growth names. But now investors are a little bit more critical of their earnings results as they really look at those names to assess the impact of higher rates on corporate growth.
Big mega cap tech. I mean, Alphabet, down 9.5%, biggest one-day drop since March of 2020. I mean, certainly one of the reasons why we saw such a drag on the market. You talked about it, but that was certainly an underperformer in a big way and really helped set the tone here today.
Indeed. So right now we're kind of at this point where investors are grappling with a lot of cross currents. On one hand, the economy has held up. We're expecting a recovery in earnings. Consumers are still spending. But on the other hand, there's not much that is really signaling a recovery at this point. People are still uncertain about the impact of higher for longer interest rates. Consumers are kind of fizzling out. Student loan payments have resumed. Some are worried that savings will get depleted and they'll stop spending. So there's two different factors here that investors are grappling with. And everyone was kind of looking to the earnings season to be the upside catalyst. And we really haven't gotten that yet. Investors haven't been rewarding earnings results the way that many people were expecting. There was this hope for a year-end rally driven by those higher earnings results, but we're not seeing that quite yet. And the rest of the tech names will be crucial to that story.
All right, and we're certainly watching for Meta. Meta shares were down more than 4% today. Its worst daily performance since July ahead of that earnings release. So as they cross, we will certainly break them. Alexandra, thank you so much. Alexandra Semenova, Bloomberg News equities reporter back there at Bloomberg headquarters in New York City. This is Bloomberg. Schwab Impact 2023, and gotta say, I feel like we have the perfect guest because we have talked so much about the fixed income world, and it's a tricky one. With us is Kathy Jones, Managing Director and Chief Fixed Income Strategist at Schwab Center for Financial Research, on site with us here at the Schwab Impact Conference. Are you really popular here at this conference?
She's like, finally, my time has come. It's been 10 years of zero interest rates, and now everyone wants to talk about yields.
Everyone wants to talk about yields. I don't know if that makes me popular, but yeah, there's a renewed interest in fixed income these days, which is pretty, it's pretty fun.
Is that an understatement, a renewed interest?
Yeah.
I mean, at least in our own programming, Carol, it's like much more than a renewed interest. Every day on our planning call, we're saying our first guest needs to be about rates. We need to have someone on to talk about rates, and there's a reason.
Yeah. We've had huge volatility, not only in the rate of change, in the increase in rates, but the level has gone up to, a level we haven't seen in well over a decade. And I think it has taken most people by surprise in both ways, that the rate of change was so rapid and that the level is so high and staying so high. So it's really just sort of changed the landscape very, very quickly. And this last leg up since, say, September has been, quite a big shock to the market.
Kathy, I feel like people are also increasingly talking about it's not just about yield, it's also about price. And I just wonder how that's kind of making it a little bit more interesting.
Well, I think that's a little bit misplaced.
Oh, okay.
So when you look at bonds, if you hold a maturity, you're going to get your principal back at par plus your interest.
Yeah, it might take 28 years, but...
Well, you shouldn't probably worry about price. Probably shouldn't buy 30-year bonds, right?
Yeah.
And most people don't. I mean, let's face it, that's not usually the time horizon most people invest in. So I think what you need to look at when you look at bonds is a total return. And that's the income that you receive plus or minus the price change over a period of time. And that's where the narrative gets kind of thrown off with people talking about, oh my goodness, it's 40% decline or something.
Right.
The ag is down 2.5% this year. It was down 13 last year, which was a terrible year. But down 2.5%, I mean, stocks do that in 10 minutes sometimes, right? So, it's a whole different asset class that way. And I think focusing on the price decline, unless you're mark to market, you're some institution that, for whom that's leveraged and that's important.
Right.
It's not really something you should probably spend a lot of time on.
You said last year was a bad year for bonds. So is this year, and so was the year before last year. So this could be the third year in a row that bonds have just performed very poorly. What does 24 look like for you?
Well, we're starting to work on our 2024 outlook, and it's challenging. It's always challenging, but this year is particularly challenging, I think. So our base case is that the economy does slow down. We have a bump here in the third quarter, but the inflation continues to fall, which it has been falling, that the Fed is pretty much done in hiking rates because of those factors, slower growth, less inflation, and that bond yields start to come down. Maybe the Fed cuts a couple of times in mid to late 2024. Longer-term yields start to fall. We're not looking for a return to very low yields, but certainly a positive return next year. And, we're seeing a lot of opportunity in that. Now, we've been running scenarios, so part of what I'm doing here at Impact is showing different scenarios so that advisors can kind of plan around that. But the good news is, a 1 to 5 year bond ladder, even a 1 to 10 year bond ladder, under most circumstances, should have a positive return.
It's interesting you talk about scenarios because I feel like I hear that increasingly, that there's I think even Jay Powell can see that there's a lot of different scenarios ahead of us, which makes it very hard for anyone who has to make calls or make projections or outlooks at this point. What's, do you think, the riskiest kind of outlook from here? Is it recession, hard recession?
Well, for the bond market, no.
Right, that's right.
If you're in high-quality bonds,
You're
a
fine.
recession will be fine. Will be a place to hide. I think the riskiest would be if we were to see, more inflation, some sort of inflation shock, whether it's oil prices or something that happens, exogenous to the underlying economy that the Fed can't handle. Then you could have real dispersion in terms of performance, and it'd be easy to be in the wrong place at the wrong time.
There was a guest on Bloomberg TV a little earlier today who referenced the lack of foreign buyers when it comes to U.S. Treasuries. How concerned should we be about that?
I will push back on that notion. I follow the data pretty closely. It's not, the data's not smooth. You have to look in very different places, but on the Bloomberg terminal, when you look at the tick data, say for China, they are buying bonds. When you look at the total holdings, foreign investors, it's still very steady. So some of the decline in so-called purchasing is because it's mark to market. The price is down, as you mentioned. The price is down. It's looking like they're selling or they're not buying, but actually they're just holding. So I would push back against that idea.
But is it more problematic that the Fed isn't buying and that we're also a lot of new issuance coming into the market and probably more coming?
That's a bigger dynamic, right? Because we've lost the price-insensitive buyer, the Fed, and we have a lot more issuance. Again, supply, historically, not a big concern. When I have spent many decades trying to find a correlation statistically between supply and yield, and I can tell you, there's nothing reliable out there.
No, seriously?
Seriously. I mean,
that's important.
I've been doing this since the late 70s.
Yeah.
And I have tried to do this. I've been sitting on trading desks where, it's always like, oh, an auction's coming. We got to back up. This has got to happen. That's got to happen. It's kind of 50-50.
That's interesting because it's such a big part of the narrative right now.
I know.
So what is the important narrative? Our last guest was kind of laughing at me because I said something about having lived through many different market cycles. He's like, are you telling me I'm old? I'm like, no, but I just feel like there is something to having seen not every market cycle is the same, no doubt about it. This one's a crazy one, coming off the pandemic and everything that went along with it. But is there a market cycle that you kind of lean on to say, maybe this helps me understand a little bit about where we are? Or you can tell me, no.
Well, part of what I'm talking about tomorrow in my session is how different this cycle is from most. It reminds me a little bit more, in some ways of the 90s when Greenspan doubled the Fed funds rate in a year from 3% to 6%. But inflation was pretty quiet at that stage of the game. It wasn't as volatile as it is now. So this is more like a combination of other cycles, but it's not the same.
I'm still trying to get out from you what 24 looks like and what longer term looks like. Because
you've started working.
What are the things? What are the things that you're taking into account right now? What's going into that worksheet that you're working up right now for your outlook?
So the three major drivers of bond yields tend to be Fed policy, economic growth, and inflation. I feel like all those are working in a positive direction next year. The Fed policy, it's either higher for longer from here, or it's down a little bit. So that should work.
Would you like some water?
Oh, thank you. Been a lot of talking today.
I bet.
And then the second one, inflation, is coming down. When you look at the core PCE, it's down quite a bit on a 3-month rate of change basis, and all the inflation charts are, turning over. And then, we have economic growth, and that's been the surprise. The third quarter bump in growth has been, I think, the thing that threw everybody off.
So that, given what you just said, would you say that yields have peaked this cycle?
Give her a longer question so she can drink some water. Would you?
Well, why don't we talk a little bit about that?
What was your question?
Everyone's always telling me to ask shorter questions. Everything that Kathy just told us, things are moving in the right direction. Would you say that yields have peaked in this cycle?
I believed it before, and they went back up. Right. So I'm a little gun shy to make that call. The way the market's behaving, it doesn't act like the peak is in. Okay, and that's more sort of a technical, not a fundamental point of view. It goes up too easily. There's like an air pocket whenever yields go up.
So have you ruled out 6%?
Yes.
Definitely.
I don't have, well, I have 6%
on the
Fed,
10-year.
I have 6% Fed funds in one of my scenarios, but the 10-year doesn't get there because then you re-invert, invert the curve if the Fed goes to 6%.
So I want to make sure I heard that right. You don't see this cycle 6% on the 10-year.
I don't have it built in because you think about all the tightening that has happened, not here alone, but all over the world. We have, Germany's in recession. We have a slowdown. China's still struggling with this debt overload. You ask yourself, where is the growth and inflation going to come from with all the tightening and financial conditions that's taken place that would get us to 6%? We'd have to have a pretty robust kind of surprise or some external shock that was so huge. And I just...
Oil prices?
Yeah, but even oil prices, I mean, it's a tax, right? So even an oil price shock probably wouldn't do it, I think.
U.S. getting into military conflicts increasingly?
Yeah, I
mean,
you can construct a 1940s, 50s kind of scenario if you want to.
That's the second time
if you
in a
want
week
to.
that we've had people make references to that.
I mean, that would be the scenario, I think. But that also involved the Treasury owning bonds, buying bonds and holding down yields to finance the expenditures. So I'm not sure that would get us to 6%. So it's hard to really construct that scenario. It's kind of our worst case is the Fed gets to 6%, but the yield curve inverts more when that happens.
What about a recession call?
Yeah, it's a tough, again, another one of those tough calls. This cycle's so strange compared to what we've seen in the past. But there's certainly a risk of recession, particularly the tighter things are for the longer. And you are seeing stress. One of the things I like to do is read the comments in the regional Fed reports. Just amazing amount
Facebook?
And the beige book, but the regional, the comments on the regionals are just Dallas particularly. I mean, they're very spicy. You get a lot of great comments out of there.
A little insight into Kathy over here.
Yeah, this is what I do in my free time.
It's okay, we love it.
Yeah, but what you're hearing.
Well, what do you get?
Instead of inflation being the big concern, which it was 6 to 12 months ago, now it's a slowdown. It's commercial real estate. It's the auto sector and the difficulty of borrowers to get financing. It's small companies worrying about their financing costs. So there's been a real shift in tone. And I think that's telling you that the rate hikes are biting.
But we're not seeing that play out yet in the labor market.
No, we're not, which again, very strange cycle that way. Normally, you would by now have seen more softness in the labor market. This cycle has been different.
You can go anywhere in the fixed income world. What do you like?
I thought you were going to say you go anywhere in the world.
Well, that's, for when we're off air. No, but I mean, municipals, corporates. We talk so much, of course, about the Treasury curve, as we should, but where would you go, or where do you see the best opportunities?
So we like a mix of high credit quality bonds. It's Treasuries, government-backed securities, some MBS, investment-grade corporates, investment-grade munis. You're talking about putting together a portfolio with a duration of maybe 5 or 6, that you're getting 5.5%, 6% returns. That's not a bad thing.
Where don't you want to be right now?
High yield and bank loans.
Interesting. Bank loans.
Smaller credit risk. Too much credit risk.
All right, we got to leave it there. What?
Hey, we're getting some breaking news.
Meta earnings.
Meta earnings are out.
Kathy Jones, thank you so much.
Thank you, Kathy. Meta Platform seeing shares of fourth quarter revenue coming in within estimates, $36.5 billion to $40 billion. Meta shares down as much as 4% ahead of earnings, but going up now, Carol, about 2.5%.
Yeah, and this is all already after a 4% decline in today's regular session. So we're seeing definitely Meta sees higher infrastructure-related costs next year. 2024 total expenses of about $94 to $99 billion. The estimate was for $96.53. But that revenue outlook, we're going to talk a bit more about that in just a moment. Watching shares in the aftermarket.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Tech earnings front and center, fast and furious. Meta Platforms after hours up now by 4.2%, bouncing around, but still up just about 4%. Meta reported revenue for the third quarter that beat the average analyst estimate. Meta, of course, the parent of Facebook and Instagram. Our John Ehrlichman standing by, and he'll have a whole lot more on Meta coming up in just a moment. Also reporting moments ago, IBM, it reported better than expected sales. It also affirmed its full-year outlook. After hours, we do have shares of IBM up now by 1.4%. But again, Meta Platforms higher now by 3.3%. Down day on Wall Street, the Dow, the S&P, NASDAQ all declining. The NASDAQ 100 index had its worst drop of 2023, and the Dow Jones Industrial Average is now negative for all of this year. So today we did see the Dow drop by 105 points, down by about 0.3%. The S&P today, S&P 500 index declined 60 points, a drop there of 1.4%. NASDAQ, the composite index, down 318 points, down 2.4%. The NASDAQ 100 index down 2.5%. 10-year yield 4.94%, with a 2-year that's yielding 5.12%. Spot gold up almost $9 the ounce to $19.79, up 0.5%. And West Texas Intermediate crude up 1.8%, $85.27 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week live from Schwab Impact 2023 in Philadelphia. We'll get back to some of the investment interviews. Having said that, I'm curious what maybe some of the folks would say about Meta. Charlie breaking it down, but the stock is up more than 4% in the after hours. Profit, a revenue beat. You know, I think there were some concerns coming after Google last night, Alphabet, because that stock certainly took a big hit in today's trade, disappointing over their results. But Meta certainly surprising to the upside here.
Yeah, on fourth quarter revenue, I should note, coming in at 36.5 to 40 billion, beating estimates of 38.76, or I should say within the range there. And then third quarter revenue, looking at the most recent quarter, Carol, beating estimates coming in at 34.15 billion. Estimates were for $33.51 billion.
All right, so let's get to it, because with us is John Ehrlichman, co-host of Bloomberg Markets on Bloomberg TV. He's joining us on Zoom from Toronto. Hey, John, nice to have you here with us. Meta, investors seem happy in the after hours, sending the stock up about 3-4% here, actually up almost 5% now as I do a quick update on it. What jumps out for you at this that really is impressive in the results?
Well, I would say, Carol, that this was a year where Mark Zuckerberg, he described it as the year of efficiency after a very challenging 2022, to say the least. If you go back even to this quarter a year ago, the company was in the doghouse, and they were challenging to convince Wall Street that their long-term strategy to build for the future, all this metaverse focus, that was going to be the right thing to do, especially if the economy was starting to turn. So this quarter, in a lot of ways, does feel, Carol, a little bit like what we saw in the second quarter. They showed top-line strength. They showed bottom-line discipline. We've seen massive cost reductions. Headcount has come down dramatically since last November for the company. And so if they can grow their revenue at a time when they are sending a message to the street about costs being improved, it's a nice recipe. Now, I think the stock story is going to be an interesting one, because you're right. We saw a lousy day for Alphabet. A lot of that had to do with the cloud business as opposed to the advertising business. So that looks pretty good right now. But I think you're going to hear a lot more of them pushing this message of AI, that AI can give their users more tools and keep engagement high, and that AI can also help advertisers get better engagement for their ads. I would imagine you hear a lot more about that again.
Yeah.
Mark Zuckerberg talking about it in the release, right?
Yeah, he referenced the new virtual reality headset. That's the Oculus Quest 3, and then those Ray-Ban smart glasses that they unveiled recently. Again, though, John, I go back to this over and over again. The company is called Meta because of the metaverse, and its name was changed for a reason. Reality Labs is expected to lose $3.94 billion this quarter. Talk to us about, a company that still gets more than 95% of its revenue from targeted ads.
Yeah, they're leaning into it. They're leaning into it because they plan to continue focusing on spending a lot of money to try to get that metaverse thing going. I mean, even if it's taking a backseat for now, to your point, Tim, they haven't changed the name back to Facebook. It is Meta. And, there's different components. It starts, everything starts to fall into the same soup bowl on this. But I guess there's different components to what the metaverse ultimately might be. You talked about the Quest 3. There's a good example. Apple's got the Vision Pro. Quest 3 maybe is sort of the product for the rest of us, not as splashy, but something that kind of gets you into a world that the company thinks is going to be very important in the future. It's a costly world. It's a costly world. They're building it. And so, again, after the lessons they learned last year, they said, okay, well, let's lean into the story of advertising for now. The challenge for them, I think, is that if you got a nice run up in the stock coming into the second quarter, and then you sort of had a very positive message for the second quarter, but the stock was already bumping near its highs of the year, and we had kind of gotten there as well recently. I mean, this is the second best performing stock this year behind NVIDIA. So you can say AI to maybe offset some of that spending that's going into things like Reality Labs right now. That's going to be interesting. It's hard to know whether or not, in the current environment, this earnings environment where really Netflix had a very strong positive reaction. Everybody else, it's a little bit more measured, and that might be just because we've seen such high expectations for this turnaround for Meta so far this year.
Well, and what's interesting, if you look at the stock reaction right after it came out, we did see the stock sell off a little bit, and then it bounced back, and so we do see it up still about 3.8%. But, John, I'm curious, with all this spending that they continue to kind of stick to build out the metaverse, whether or not investors at some point are going to maybe think a little bit more about, what that means ultimately in terms of profitability going forward.
I mean, I think the short-term strategy, Carol, at the company was, let's show how profitable we can be. And you literally just saw that in the third quarter results. They were very impressive. And the company's showing that we can have that bottom line discipline if we want. Now, I would say sort of a side story to that is when you're talking about the expenses for next year, there does still seem to be a focus on the fact that they might have some. I mean, we'll still have to look at what exactly they said here, but I almost interpreted it as they had so many layoffs at the company that they have to get ready for some additional expenses tied to just making sure the staffing levels make sense for next year as well. Mm-hmm. It's a balancing act. It's a balancing act for the company. I think people would probably like to know, where the top line growth is coming from. On the product front, right? There's a lot of stale parts of this empire, but they've got Reels, which has done very well. They keep talking about, rolling out the Reels advertising playbook, that's been strong. I don't know if they're going to talk about Threads, but there was a lot of fanfare around that X rival.
Yeah, this is the competitor. Yeah, the competitor to Twitter, to X. Is there are they advertising on Threads yet?
No, I mean, they had a lot of fanfare. They were ready to roll it out. I remember when they launched it, they said this was a risk, and I think they felt very rewarded with the early traction that they got with it. But it certainly seems to have stalled out dramatically. And for a company that, let's face it, has had sort of some copycat measures in their history, I think they're going to try to talk a little bit less about Threads, although we'll see, and talk a little bit more about the stuff that they've been able to emulate that is working. And that's why I keep going back to AI. It's like this balance between, yes, they are still committed to making their virtual reality goggles work, to sort of sell this long-term story of the metaverse. But the AI, it's just an easier sell right now when they've already been able to implement some of this into their products. They had ChatGPT envy, let's face it. And so they can talk, and I'm sure they'll continue to talk because some of their senior people are all over this, about ways by which you can interact with more AI chatbots, and they can introduce more generative AI tools within their existing social media products. Keep the engagement levels at reasonable levels to satisfy the advertisers. But if this is the one company that always had great ad tech, ad tools, and I think if we're going to compare them, let's say to Twitter or X, that was one of the things that they were always much better at doing. So to your point, Tim, I guess if they could get to the point where they could put advertising on Threads, they'd be able to really flex some muscle, but they'd like to see, I'm sure, the product do a little bit better before they do that.
I gotta say, in this release, there's a lot about total expenses, restructuring costs, facilities consolidation charges, and severance and other personnel costs.
Carol, it's the year of efficiency.
Now,
Mark Zuckerberg said it.
But then there's also talking about Reality Labs a lot, and just like the build out and capital expenditure. So it is an interesting year, and I guess ultimately, John, we will see what 2024 brings in terms of this shift and whether or not it ultimately starts to pay off, or whether investors have to be a little patient in terms of the impact of this. Many would say, right? I mean, before this all pays off, the metaverse, it's going to take a while, right?
Yeah, and I think if you look at the next 10 years, I think people think form factors will change. I think a lot of people think that we won't necessarily spend as much time on our phone if there's a better way of doing things. But that can be messy in the short term and costly, right? And so if you dealt with what you dealt with last year as Mark Zuckerberg, your ego gets a little bruised. You bring down the hammer. You show everybody that you're back to those financial, quarterly results that we got used to in the past before the recent slowdown.
Right.
And then you get back on that train and try to spend and see what happens.
And in the meantime, they're going to, as they say, monitor the active regulatory landscape. That's a nice way of putting it. There's a lot.
As one does.
As one does. John Ehrlichman, thank you so much. Co-host of Bloomberg Markets on Bloomberg TV, of course, joining us on Zoom from Toronto.
Let's get a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Well, after weeks of uncertainty, the House has finally settled on a speaker. It's Congressman Mike Johnson of Louisiana, the fourth candidate to vie for the position. Congressman Patrick McHenry announced the winner earlier this afternoon.
The Honorable Mike Johnson of the state of Louisiana, having received a majority of the votes cast, is duly elected Speaker of the House of Representatives for the 118th Congress.
The final tally was 220 for Johnson, 209 for Democratic Minority Leader Hakeem Jeffries. Johnson, who was first elected to Congress in 2016 when former President Trump won the White House, is now the speaker with the least Washington experience in generations. In another vote today on Capitol Hill, a former White House chief of staff is a step closer to becoming the U.S. ambassador to Israel. By a 12-9 vote, the Senate Foreign Relations Committee advanced Jack Lew's nomination for an expected confirmation by the full Senate. Well, the drug lobby is pushing Congress for a bill to crack down on so-called pharmacy benefit managers.
The Pharmaceutical Research and Manufacturers of America is mounting a multi-million-dollar lobbying and advertising effort targeting industry middlemen to rein in their fees and shift the blame of high drug prices to pharmacy benefit managers. The group says even without legislation enacted, the move is a win that's helped garner bipartisan support. The PBM trade group, Pharmaceutical Care Management Association, calls the proposal misguided and claims it won't help lower prices. In Washington, I'm Amy Morris, Bloomberg Radio.
Former President Trump is being fined $10,000 for violating a gag order in his New York civil fraud trial. The judge in the case says Trump violated the order a second time. Last week, Trump was fined $5,000 after not deleting a negative social media post aimed at the judge's law clerk. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Meta Platforms reported revenue for the third quarter that beat the average analyst estimate. Bloomberg's John Ehrlichman says the parent of Facebook and Instagram has come a long way in the past year.
If you go back even to this quarter a year ago, the company was in the doghouse, and they were challenging to convince Wall Street that their long-term strategy to build for the future, all this metaverse focus, that was going to be the right thing to do, especially if the economy was starting to turn.
After an initial move higher after hours, Meta Platform shares are now lower by about 2%. IBM did report better than expected sales. It also affirmed its full-year outlook, suggesting the company's focus on software and hybrid cloud services is producing positive results. A down day on Wall Street with the Dow, the S&P, and NASDAQ ending the day in the red. In fact, the Dow is now negative on the year. So what about the market outlook? Ben Kirby is co-head of investments at Thornburg Investment Management, and he was a guest right here on Bloomberg Business Week.
We see the economy slowing. A lot of people see the economy slowing, but also just cash at 5% is attractive to people. So, maybe more than being bearish, it's hey, if I can clip 5% for a medium term, maybe that's the thing to do.
And you can hear more of that conversation on the Bloomberg Business Week podcast. So today, the Dow, the S&P, and NASDAQ all declined. In fact, the NASDAQ 100 had its worst drop of 2023 as yields keep climbing. NASDAQ 100 index today down 2.5%. NASDAQ Composite Index down 2.4%. S&P lower by 61 points, down 1.4%, while the Dow Jones Industrial Average was down 105, a decline of 0.3%. 10-year yield 4.95% with a 2-year at 5.12%. Gold up $7.82 the ounce to $19.78. And West Texas Intermediate crude up 1.9%, 85.29 a barrel. So again, recapping here, the Dow negative on the year, biggest drop of the year for the NASDAQ 100 index. S&P down 61 points today, down 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here at the Philadelphia Convention Center. We are at Schwab Impact 2023, and you just look around us, and there are just lots of exhibits, lots of booths.
Lots of advisors.
Lots of advisors.
That's what I would say.
Who are figuring out how to maybe do what they do in a smarter way, more efficient way.
I've never been around more advisors in my life, Carol.
Do you feel well advised?
I was advised on the way to the bathroom, and I was advised on the way back from the bathroom.
And what were you told?
Oh, they have solutions for where you to put your money.
Well, listen, we have a great guest with us right now, Jelena Kirsch. She's Managing Director, Head of Client Experience for Schwab Advisor Services, here with us on site at the Schwab Impact Conference. For those folks, first of all, welcome.
Thank you.
And thank you, because as we said earlier, thank you for having us. People might not be familiar with this side of the business. Just for those who are listening and watching right now, what this is all about.
Yeah, this premier event for us is it's like a homecoming, because we have 15,000 independent advisors who are all about being fiduciaries to their clients. So they've got the best interests of their clients in heart. It's not about conflict with product and placement and how much they can make. It's really about how they can support their clients and their goals. And it's really well aligned with us as a company and our corporate values.
But I think what might be challenging for somebody who doesn't follow the industry or follow Schwab closely is they say to themselves, wait a second, I can go into a Charles Schwab anywhere in the U.S., or I can call Charles Schwab and I can have an advisor available to me. Yet you also support advisors who ostensibly look like competitors to your own advisors. You're nodding.
Yeah, it's definitely true. There is a wide spectrum of needs from across the entire client base. So for a lot of clients, they want to be able to go into a local branch, as you cite. But sometimes they also want to have a deep relationship with somebody that's local in their community that is also independent business owner.
So how does that person who's an independent business owner who is local in someone's community use Charles Schwab services?
So we act as their custodian. So they place their assets with us to create a safe, secure haven for their business to transact. So any kind of operational needs that they have, product needs that they might have, we can support those seamlessly for them, which allows them to run a much more scalable practice.
So tap into what they are wanting more and more in terms of being able to do their business maybe more efficiently, more productively.
Number one thing.
And best in terms of for their clients.
Yeah, absolutely. So the number one thing we hear each year, we do a benchmarking study. Perhaps you heard about it or read about it, but we have thousands of advisors who participate. The number one thing that they told us that they want this year was help creating a more streamlined digital process flow in their back office. Because again, scale is king for them, and as they're growing this part of the industry, fastest growing part of financial services. So they really need help and support creating process automation so they can spend time serving their clients, right? Nobody wants to be spending time on paperwork when you could be talking in relationship with a client.
Back office, not super sexy, but it's got to get done. No, I know, I think about it like all the times, but it's got to get done. And if you can spend so much money, so much time on it, and then you're kind of distracted, if you will, from really the core of the business, what you're supposed to be doing.
Yeah, it's got to get done accurately, and really, I think the safety and security of our brand is a halo for advisors. They trust the brand, and so therefore their clients feel good about placing their assets in custody. They know we're going to look out for both the advisor and their clients.
How sticky is the custodial business?
It's very sticky.
I would imagine. Big piles of money do not like to be moved from place to place.
Well, and back to the back office stuff, which isn't sexy, it's hard. It's hard to lift an entire piece of your business and shift to a different custodian or business model. We're working, though, to really try to make that more seamless in terms of digital onboarding, digital account, all of those things so that it's easy.
But it is a double-edged sword for you because, you want people to choose you as a custodian, but you want the people who have you to stick with you as a custodian. So how do you make it easy to have somebody who might use a different custodian right now come over and say, okay, we want to use Schwab?
Yeah, so we have an entire onboarding department, if you will, that will actually be hands-on, feet on the ground, like lifting out the business for you so that it's a lot more easy. It still is a lot of work. I mean, certainly we're hearing from a lot of advisors who were part of the integration, the TDA integration. That's a move, right? And it represents some additional work for them. But I think the resources we can bring to bear actually help make that smoother when you're trying to lift out and move over.
Speaking of that integration with TD Ameritrade, the back office, is all of that done?
Yeah.
And you guys are
100% done. Good accuracy. All the assets came when they were supposed to. So that's a win for us.
What about on the consumer-facing side? Is that transition totally done?
Not 100% of the way. They are probably about 75-80%. There are some of their active trader population who are big users of Thinkorswim. That'll be migrating in the first quarter of next year.
What was the trickiest part from your perspective of that integration?
I think the trickiest part for us was just making sure that all of these things were going to flow over. There's a lot of technical data that you have to think about implementation-wise. And when you think about the advisors, they're using third parties. They have a data ecosystem that has to be maintained. So it wasn't just about books and records and asset transfer. It's about ensuring that the data that they're used to getting every single day comes to them when they expect it so that they can run their businesses, rebalance portfolios, and do all of the things that advisors are doing.
A few hiccups?
Sure.
A few hiccups.
Definitely a few hiccups.
Yeah.
And I think a lot of it is experiential. People get used to using a certain platform. And when you move that and shift that, it's change management.
I wonder, too, and I was thinking about our earlier conversation when we took with Rick Worster. We brought it up with a couple of our different guests about AI. How does that help with the back office? Does it?
It does. It does, although I would say it's early days for us. I think we're being very careful just because there's a lot of regulatory scrutiny on how we as a broker-dealer are implementing that. And we have to be careful and walk before we run there.
What are some, we have 30 seconds left, but give us some ideas of how you can implement AI.
No.
Give me an idea, though, how you can implement AI.
Yeah, so we're actually going to start internally. Knowledge management, really putting knowledge in the hands of our service professionals who have to know a lot about a lot.
I was just curious about, our audience, it's a smart audience, an investor audience. What do you think, in 25 seconds, what they should know about what you're doing?
I think they should know that we're here to support the way that they want to personalize for their clients at scale. It's the balance between digital and people. one or the other alone is not going to get it done. You've got to harness it, and you've got to deliver on that and still make it feel personal.
All right. We've always talked about like individualized service, right? And understanding them. Jelena, thank you so much. Really appreciate it. Jelena Kerr. She's Managing Director, Head of Client Experience. I bet that keeps her pretty busy at Schwab Advisor Services, right on site with us at Schwab Impact 2023. This is Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. We continue to keep an eye on Meta Platform shares. Now after hours, they are up by 3.4%. They have been bouncing around after hours. Meta did report revenue for the third quarter that beat the average analyst estimate. Meta is the parent of Facebook and Instagram. Also after hours, we're keeping an eye on IBM. It did report better than expected sales, and it affirmed its full-year outlook, suggesting the company's focus on software and hybrid cloud services is producing positive results. T-Mobile posted third quarter profit today that did beat analyst estimates. And with more on that story, here's Bloomberg's Tom Busby.
Charlie, it got a lift from better than expected mobile customer gains. T-Mobile, the last of the big three wireless carriers to report strong results, a positive sign for the whole telecommunications industry, which has been struggling with subscriber growth in recent years. The Bellevue, Washington-based company added a net 850,000 postpaid mobile phone customers in the quarter that ended September 30th. And that was way ahead of analyst estimates of 780,400. Charlie?
And that's Tom Busby reporting today. T-Mobile shares did decline little change, down 8 cents, down by less than 0.1%. Rivals AT&T down by 2.2%. Verizon, which reported earlier this week, down by 1.8%. So again, recapping, we did hear from both IBM and Meta Platforms. IBM after hours up now by 1.8%. Meta Platforms up by 3.2%. Those are our top company stories. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenivek and Carol Masser. We're live from Schwab Impact 2023 in Philadelphia. Let's get a check on the latest world and national news. We go to Washington, D.C., to the Bloomberg 99.1 newsroom. Here's Nancy Lyons.
Thanks, Tim. Congressman Mike Johnson is the new Speaker of the House. After weeks of Republican wrangling, he says it's time to hit the ground running.
We've learned a lot of lessons, but you know what? Through adversity, it makes you stronger. And we want our allies around the world to know that this body of lawmakers is reporting again to our duty stations. Let the enemies of freedom around the world hear us loud and clear. The People's House is back in business.
Johnson, in his floor acceptance speech, also said the first bill he'll introduce will be to reinforce America's defense of Israel. Well, the final tally today in the Speaker vote, Johnson received 220 votes to House Democratic leader Hakeem Jeffries' 209 votes. Israeli forces continue to strike Gaza in response to the unprecedented attack by Hamas that killed about 1,400 people. Prime Minister Benjamin Netanyahu vowed to eradicate Hamas from Gaza. But what happens after achieving that goal? President Biden says there is only one way forward.
When this crisis is over, there has to be a vision of what comes next. And in our view, it has to be a two-state solution. It means a concentrated effort from all the parties, Israelis, Palestinians, regional partners, global leaders, to put us on a path toward peace.
President Biden, speaking at a joint news conference with Australia's Prime Minister, also called on Israeli settlers in the West Bank to stop attacking Palestinians. The Senate Foreign Relations Committee has approved Jacob Lew to be ambassador to Israel, moving quickly to get him in place during Israel's war with Hamas. The panel voted 12-9 today to move Lew's nomination to the Senate floor for a final vote as soon as next week. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to Carol and Tim.
All right, Nancy Lyons back in D.C. We are at Schwab Impact 2023 in Philadelphia. We're going to get back to some investment conversations in just a moment. Having said that, I think we need to go back to earnings. And I know Charlie has been all over it, but I think you can't say it enough since it really, in a week where we don't have Fed speak anymore, right? Because we're getting ready for the next Fed meeting.
It's a blackout week.
Yep, it's a blackout week. Earnings are important. So Meta posting third quarter revenue that beat estimates. Shares, we have seen them up about 4% in the aftermarket. Reality Labs operating losses to rise meaningfully in 2024. EPS beat estimates by a lot at $4.39 a share.
The share's up about 2.6% as we speak.
So off some of those highs.
Yeah, let's talk about Mattel because it's a different story over at Mattel. Shares down in the after hours by more than 6.5%. It did post quarterly results that beat Wall Street estimates. We should note the toy maker maintained its full-year sales outlook due to softness in the industry and a weaker global economy, and that's perhaps what is sending shares lower in the aftermarket.
Yeah, it's, listen, they were definitely buoyed by Barbie, and that has certainly had an impact on this company. But again, those quarterly results did beat, but as you said,
it's the outlook. It's the outlook. Yeah, it's the full year sales are just going to match 2022 sales. So one would expect with the success of the Barbie movie and the success of the franchise that sales would actually increase over last year. But Mattel's saying that they're going to match the $5.44 billion recorded in 2022.
Do you want to get to IBM as well? It's up about 1.6% in the aftermarket. Third quarter revenue was a beat, $14.75 billion versus an estimate of $14.68. still sees fiscal year revenue at a constant FX up 3 to 5%. The estimate was up about 3%, so that's some upside there as well. So better than expected sales affirms their cash flow view, so investors liking what they heard in the aftermarket.
Yeah, ahead of the results, analysts did raise concerns that an unpredictable economy would hurt IBM's consulting unit. That division reported $5 billion of sales, slightly short of the $5.1 billion expected by analysts.
It's a lot of earnings, and earnings was definitely on the mind of investors in today's session.
Today. Alphabet shares fell, but most in a single day since 2020.
Yeah, exactly, and that was certainly depressing. But you also had geopolitical concerns. We'll see what tomorrow brings. We've got a speaker, but we do get some GDP data. We get some inflation data. That's something that the Fed obviously watches, and it's one of their preferred metrics. So we'll see how that sets the tone. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Hi, everyone. Bloomberg Business Week continuing on this Wednesday, October 25th. We're live at Schwab Impact 2023 at the Philadelphia Convention Center. So much going on around us, lots of conversations. Everybody's talking about the markets.
It's happy hour here.
It is happy hour.
The lines for...
Is that why the Wi-Fi is working?
That's why the Wi-Fi works really well, because everybody's in line to get beer and wine.
I've had no Wi-Fi, and all of a sudden it's working.
Hey, turns out we can actually do the show even if we don't have Wi-Fi.
It's amazing.
It's amazing.
All right, hey, listen, coming up, we're going to talk a little bit about U.S. politics, but specifically we're going to get into corporate America. Politics certainly has a role there. Corporate America, the new battlefield. Business Week's Josh Green writing about it, and the former Trump data scientist who's key to navigating the culture wars. Bud Light, anybody? That's a little hint.
Yeah, I mean, it depends on who you're talking to, because there are certainly some people quoted in that story who say, no way, no Bud Light ever again. Also, a guest who you're very excited about.
Yeah, Ron Shaich.
Yeah.
Haven't talked to him in years, but he's the founder and former chairman and CEO of Panera Bread, Alban Pan. He's also a lead investor, chairman of Cava, Tate, Life Alive, Level 99. He's all about restaurants, folks. He is actually someone that many have considered the father of fast casual dining. So I'm curious what he has to say about the environment today. He's also got a book out, Know What Matters, Lessons from a Lifetime of Transformations. There's a couple interesting chapters that I've been highlighting, so we'll see what he has to say.
Yeah, looking forward to that. We got a great hour coming up. First up, though, a check on the day's trade and top business stories. Here's Charlie Pellet.
Which turned out to be a down day for the Dow, the S&P, and NASDAQ. We are keeping an eye on shares of Meta Platforms, parent of Facebook and Instagram. Shares are higher after hours. Right now, we've got Meta up by about 2.65%. Also reporting earnings after the close of trading today, another big tech name, International Business Machines, IBM. That stock up now by just about 2.5%. Meta, though, did report revenue for the third quarter that beat the average analyst estimate, and IBM reported better than